And welcome back, everyone. Quick 1 to 5 this morning that we absolutely sniped on NQ from one of the levels that we pointed out this morning as well. So what I'm going to do is fast forward the charts, break this down as usual, but we smacked a nice 5R for around 20 bandos this morning, guys. So light 20 on the day, and it happened in a quick 3 minutes. So beautiful trade, beautiful setup. You may have seen the execution on Instagram, and my OBS ended up glitching. So I didn't catch the end of this, but you see it here. You see it now. This is no replay. This is real trade of 8. So let's go ahead and rewind the charts here till 9:30 a.m. open. So this is what we were looking at in terms of 9:30. To be honest, I was really looking forward to potentially getting a buy off of this order block. But before the market even had a chance to open, we had already invalidated that. So right off the bat, I knew we would probably end up dropping bearish to at least the order block mean threshold on the 4-hour. And then we were also in a 4-hour premium. So I thought we'd probably reach for at least a 4-hour discount lower there. And what happened off market open? We simply decided to just melt. So it was one of those days, easy to read, hard to enter. We just melted right off open with very little room for retracement. Just kept running all the way down to here. Now, I saw that price was clearly not retracing, clearly not coming back to respect any of these fair value gaps to offer a retracement. So there was no real way to catch a continuation at this point. So what I thought is, let me wait for price to start putting in a low, to start rejecting from maybe one of these 4-hour levels. We had other 4-hour levels over here as well. We had a 4-hour order block, and that also lined up with a daily wick, consequent encroachment. So we had a few levels to look for. So I was like, okay, I'm just going to wait patiently and see if one of those gets taken. And what happens? We come into that new week opening gap / 4-hour gap. We start to make a bearish doji. So I go ahead and mark that low. I'm like, okay, well, if we form a couple more doji candles, possibly some bullish dojis, and here we could possibly see a situation where we chop, sweep, and then begin to retrace. But that has to happen before we start tagging some of these fair value gaps. Otherwise, we could simply just retrace from here to here and then continue down. So those were the two scenarios I was looking at, but this was a very sensitive range. So I waited for a couple more candles. I wait for one more candle, and I was actually going to take this level, but we did not close bullish. So if we closed the bullish candle, that would have let me know that we were probably retracing. The fact that we didn't told me we were probably going to continue. And so what did I do? I just waited. So I actually left my stream at this point. I said, watch these two levels. If we close bullish in here before getting up here, you can go ahead and take the buy. If not, this could potentially be a good area for a sell, either one of these levels. So I saw this next candle get put in. I decided to not take my sweep down here. Saw another candle start to form, and this is the candle where I took my entry. And what did I do? I simply waited for price to show me what I wanted to see. So in this case, I wanted to see this low, and this low that we newly created down here get left intact. So now we have triple relative equal lows that we can target to the downside. Now, another crucial factor in this entry, like why did I take this one instead of this one up here? Well, first thing was trend. We had already been trending all day, so I wasn't expecting a full retracement. If anything, I was expecting like a 25% retracement, maybe. Also, the size of the gap. Notice how on the 15 that this gap is much smaller than the other gap. And why is that important? It's important because of stop loss size. So you can see here with an 11-point stop, you can see at consequent encroachment, I still am able to account for the entire fair value gap. And then even down here with a 15-point stop, I'd still be accounting for consequent encroachment, even if I wanted to keep my order at the beginning of the fair value gap. Now, on the contrary, if I were to take this one up here, sure, it might respect the bottom of it, but what if it wants to reach for consequent encroachment? Well, that means I need a 40-point stop. Well, what if I want to take the order here, but it wants to reach up for upper quarter? Well, then I need over a 25-point stop. So it also has to do with, is your stop actually efficient for the level you're about to tee off on? If yes, then that's one of the biggest things in terms of my decision making. And you can see it plays out right away, 3 minutes, and we're already in and out of the trade. So it's a beautiful model, guys. You see the executions right there. I took off one partial here, one contract there, and beautiful, beautiful trade. So if you want to learn this model, go ahead and click that video at the top there. That is my full top and bottom ticking strategy. And if you want to trade this live with me every single morning, see what levels I'm marking, see how I process price, and produce some wins just like this, hit the link below and tap in, guys. And you can see exactly how we do this every single morning. But aside from that, y'all, have a blessed day, and I will see you in tonight's boot camp lesson.